Okay, let's look at what are the contents in this particular paper. Management accounting. The topics are given here. The core costing techniques, other costing techniques are there. Variances, budgeting, forecasting techniques, decision making, risk and uncertainty. These are the seven major areas which would be covered in your syllabus. Section wise, the number of sections which are divided in this particular paper is 4. We have section A till D. A talks about the cost accounting and decision control. Then we have the budgeting and budgetary control, short term commercial decision making. The last part of it is risk and uncertainty in the short term. Under each of these topics, again, we have subtopics also. The first part of it in today's class, what we are starting is cost accounting for decision and control. So that's the coverage of that is 30% of the syllabus, wherein we would be learning about what is absorption marginal costing, then ABC and other things under costing techniques. The second part of it, we would be learning about the budgeting and budgetary control, along with that variance analysis. Then short-term decision making. Finally, it is the risk and uncertainty. Today's class, let's start about the core costing techniques. The ones which are given here are the core costing techniques, what we will be looking into. We're going to start with absorption costing, marginal costing. Then we will also learn about other costing techniques like ABC will be learned after ABC. Then we have throughput, digital costing, joint product costing. So, but to take up all these things, the most important thing what we have to understand is we have to be very strong in terms of the terminology which is used, the various aspects of that. So let's quickly go through what they are, and if we have a strong hold on what these terms are, it becomes easy for us to take up these costing topics and then work out whatever is given there. See, what are the core costing techniques? The first one we're going to start is with absorption costing, but then the terms which are included has to be learned. The first topic here is what are the differences between financial accounting and management accounting. Financial accounting is a requirement, a statutory requirement. It is basically um, external purpose, that is for the, because it is mandatory that the financial accounting system has to be um, adopted in an organization. The financial statements have to be prepared for disclosing them. So there is a statutory requirement here. It is mandatory. Then there are certain principles here to guide how the financial accounting system in an organization is followed. Basically focuses on once the transaction takes place and that is recorded in the books of accounts. That's financial accounting. Management accounting is an accounting system for the management. The purpose is purely internal, for providing some information to the management for decision making. Management accounting is followed in an organization. There is no thing, no such thing that this is mandatory in an organization. It has to be followed in an organization. Such a thing is not present. Okay, the information which is provided to the management is useful for decision making. There are no rules and regulations. Sometimes it goes with certain assumptions which are made. The whole purpose behind that is to um, help the management in decision making. Then it is not just historical, it is historical. It takes into consideration historical as well as the future. It not only focuses on the past, but it also focuses on the future, then both financial and non-financial. But whereas in financial accounting, it is only those transactions that are measurable in terms of money are recorded. But here in this case, it is apart from monetary transactions, if the financial transactions, there are certain other non-financial transactions are also considered. Then we see management accounting is helpful in planning, controlling, and decision making. So the areas where management accounting is applied is in terms of preparing plans for the future. After the plans are prepared, they have to be implemented. So at the time of implementation, then a comparison about how they are implementing, how what is their actual performance as against the budgeted performance or the planned performance. Then, if there are any deviations, measures are taken to correct those deviations. So that is the controlling part of it. And in situations where decisions have to be taken, accounting is also useful in terms of decision making. What are the elements of cost? There are I mean, basically we are talking about the classification of cost. See, there is a very big classification of cost. The table is quite a big one. So there are many types of, but at this moment, whatever is presented, let's understand. If time, if need arises that we have to look into, that is elements. If the need arises, I will also further elaborate on the classification, because we would be requiring to look into other types of classification. But as of now, to begin with, the classification is based on nature, elements, and behavior. The behavior part of it, how does how do the costs behave? So that is the point. How do the costs behave? The behavior is when there is a particular pattern about their behavior, then according to that they are classified. We call that classification by behavior. There are costs which do not change absolutely. They are the same, they're constant, they're fixed, so they're called as fixed cost. So any level of activity, but then they do not change is subject to what? When do they not change? It is not with the time, it is with any other aspect, it is with the changes in the level of activity. So the behavior is subject to the changes in the activity levels. It is not with any other thing. We cannot say that any number of years it would be the same. That is not the definition. That is not the meaning of what is a fixed cost. A cost which remains fixed for any level of activity is called as a fixed cost. There is a cost which changes, and that change is also proportional. So, if let's say that cost per unit for a particular you item, let's say material. For example, let's say material costs $5 per unit. So for one unit, it will be 5. 2 units, it will be 10. 3 units, it will be 15. 100 units, it will be 100 into 5. 1,000 units, it is 1,000 into 5. So it changes, but changes proportionally with the activity level, with the level of output. Such a cost is called as a variable cost. Another cost is also changes with the changes in the activity level, but it does not change proportionately. Such a cost is called as semi-variable cost. The reason is this is partly variable and partly fixed. A part of it does not change at all, which remains fixed. A part of it keeps varying. The best example what we can quote for a semi-variable cost is any idea? That's right. Electricity bill is the best example for a semi-variable cost. The postpaid telephone bill is an example of a semi-variable cost, because there is a component which is fixed in nature. So there is a monthly rate telephone bill, postpaid mobile bills. These are all examples of that. A part of it is we see that it is fixed in nature. And over and above that minimum limit, there is another part of it which keeps varying. So that is a variable component. So when it changes, because that portion of the fixed cost does not change, we see that a cost which varies, but it doesn't vary proportionally. So that is a semi-variable cost. Then we see stepped cost is it would remain it would remain same until it reaches a capacity level, that is 100% capacity level. It doesn't change. After that, it increases, and this increased amount will continue to be the same until it touches the next level. So after that, again it rises. Again it rises, then again it remains same. It goes on like that. So when we look at that, it looks like steps. So this is also called as step cost. What is the classification based on the nature of cost? There are two types of costs based on the nature of cost. One is a direct cost, another one is a indirect cost. What is a direct cost? Direct cost is a cost which is identified with the cost object. What is a cost object? Then again, when we look into the cost, what is a cost object? Any entity with which cost can be assigned. It could be a product, a service, a unit, a department, an activity, a function, anything with an organization, any part of it, anything with which if the amount of cost can be identified, it can be charged, it is attributable, then we call such cost as direct cost. If there is a cost which is not identifiable, attributable, we call such a cost as indirect cost. Direct cost and indirect cost. Okay. Um, let's see. No, first let's also look into that. We will again come back to this part. There are three elements of cost. One is material, labor, and expenses. All those costs which are incurred for acquiring the material, we call it as material cost. So there is too much of power fluctuation. By any chance, if I get disconnected, I will continue from my phone. Okay, don't. Okay. There's heavy lightning here in our area. So by any chance, if I get disconnected from my laptop or anything, um, please wait. I will connect back uh, to my phone, and from phone I will take the class. Okay, there are three elements of cost. One is a material cost, labor cost, and an expense. All the costs which are incurred for acquiring the material, the main source of resources with which that is converted into the final product, finished product, which can be sold. Such a cost is called as material cost. The cost which is incurred to convert this raw material into finished goods is called as labor cost. Then we have any cost other than the material cost and labor cost, we call that as expenses. Okay, there are three elements of cost. Just now, that based on the nature, there are two different types of cost, which is direct cost and indirect cost. Combining these two things, okay, there are three elements of cost. So that is what we have understood. Material, then we have labor, then we have expenses. All of them are again subclassified based on subclassified based on the nature of cost. One is direct cost, the indirect cost. That part of the material cost which is attributable to a cost object is direct material. Which is not attributable, it is indirect material. Similarly, for the labor also we see direct labor, then we see indirect labor. Expense also is classified in a similar fashion. All the direct components of these elements of cost, that is direct material, direct labor, and the direct expenses added together, we call them as prime cost. This is prime cost. What about the indirect components? The indirect material, then we see the indirect labor, then the indirect expenses, all of them added together, they are called as overheads. Okay, just remember this classification. The indirect material, the indirect labor, and the indirect expenses added together, we call that to be as overheads. So let's get back to the PPT. Prime cost is the sum total of direct material cost, direct labor cost, and direct expenses. The sum total of indirect material, indirect labor, and indirect expenses is also called as overhead. Now, this terminology is very important. Later on, we will not look into the explanation. We would be using it as and where it has to be used. So first, just remember the meaning of that. Then once this is understood, initially it looks like we are doing so much of content, but after a while, the numerical part of it starts, we get stuck. I mean, we spend a lot of time on solving those things. So, other terms, what we have to remember here. What are the other cost definitions? First one is what is a cost object? Cost object is any entity with which cost can be assigned. That is either a product, a service, an activity, center, unit, department, division, anything with which we can assign that is cost is called as cost object. What is a cost center? Cost center is a center with which I mean the cost can be here they can be assigned here a center, a place in an organization or an activity in an organization wherein the cost can be accumulated. That is a department, a function, or item of equipment or an activity. Then what is a cost unit? It could be a product or a service. Cost centers and cost units are types of cost object. Cost object is anything with which cost can be, um, anything with which cost is, the costs are attributable is cost object. Cost object is again understood as the various types of cost objects are cost center. Cost center where the amount is accumulated for that particular center, like a department, unit, function, equipment, activity. The amount which is incurred can be accumulated there in that particular center. Unit is either it is a product or a service. Just give me 1 second. I have to close the door. I'll just give me 1 second. Okay. Okay, let's come to the costing techniques. To begin with, in our syllabus, what are the techniques which are there, which need to be studied? The first technique is about what is absorption costing. Absorption costing, there's another term for absorption costing, which is also called as full costing. Full costing or absorption costing. What is the overhead absorption rate? Overhead absorption rate is calculated as total budgeted overhead cost divided by budgeted quantity of absorption base. The normal practice of, did you do cost sheets, cost statements in cost accounting paper? You must have done. I know you must have done. Um, yes. Okay. So the normal style of preparing, I mean the format of cost sheet, how do we prepare that? First we write the direct material, the direct labor, the direct expenses, arrive at what is the prime cost. So the total of these three things is called as prime cost. To the prime cost, then the overheads are added, but they are not added in the format of indirect material, indirect labor, indirect expenses. How are they accounted? Those indirect costs are accounted based on the functions of the business. That is, next in order is the factory overheads are added. The those indirect costs which are incurred in the production activity, they are added factory overheads. The factory, the sum total, then of course subject to certain other adjustments also, but the condensed format I'm talking about. After this is added, this is called as works cost. Then the next in order will be those overhead costs which are incurred in the office, that is for the administration purpose. So administrative overhead costs are added. The sum total of it is called as, we have it as cost of production. Of course, I'm not discussing about the opening and closing stock of other types of inventories. Right from the beginning, I have not. This is the condensed format of this is cost of production. Then it comes the turn of the selling and distribution overhead. So that is the format in which the cost sheet or the cost statement is prepared. The point is, what are overheads? Those costs which are not identified with the cost object. So with a cost object, if we are talking about, it could be a cost center, it could be a cost unit with a product, with a service, with a department, whatever is the situation. So if we are looking at with a product or with a service, if we are preparing the cost statement for a product for a period of time, whatever is that. In that case, there are certain costs which are not identifiable. They are incurred as a common cost, as a joint cost. Fine. Let's say, for example, factory rent. Factory rent is a cost which is incurred for all the activities which are carried on in the factory premises, all the products which are produced in the factory premises. Let's say if there are three products which are produced. So the factory rent is an item which has to be borne by all the three products. Let's say A, B, C. Factory rent has to be borne by A, product B, product C. So, but factory rent will not be separately paid. Factory rent for A, factory rent for B, factory rent for C. That is one combined cost, one joint cost which is incurred by the organization. Then what has to be done? They have, this item has to be divided and distributed. So some basis will be taken. They have to be divided and distributed. For example, factory rent will go according to the space which is occupied. Like that, like factory rent, there are many items which are incurred under factory overheads category. We have rent, then we have depreciation on those tools and equipment used in the factory, power supply, water, gas, coal, fuel, supervision charges, indirect material, indirect labor. The list is